investing education channel. So, like I mentioned in my earlier video, this is basically a real money portfolio. I manage my own money, and I share my stock picks and so on with you guys. And then in the process, I hope to share with you the reasoning behind some of the stock picks, and I also hope to learn from you guys when you provide your insights in the comments and so on. Today I want to talk about my investing philosophy in general. So basically, I'm a long-term investor. I don't short stocks because it's very unpredictable. And basically, if you're shorting a stock, also, your upside is limited. But if you buy a stock and you're long on a stock, your upside is unlimited. So, in terms of choosing stocks, I have quite a strict criteria. Maybe let me just go up to that. I wrote it down here. Okay, so basically, when I'm choosing businesses, I must understand the business first and foremost, right? If I don't understand it, if it's something way out of my depth, or it's something that takes too much research or too much effort to understand, or it's too unpredictable, or it's just too faddish, or too prone to trends, or to things I cannot predict, then it's probably out of my investment universe. Basically, Charlie Munger calls it a too hard pile. So basically, if it's too hard, I try to ignore that business as well. I think the second criteria is the one that's really important. I want to invest only in businesses that have moats, very strong moats. So of course, Warren Buffett came up with this concept of a moat, right? Basically, it's the water surrounding a castle, and so you don't want your competitors or your attackers to really attack your castle, right? So you want a moat which is very wide. You want crocodiles in the moat, figuratively, and you want it to be as strong as possible, and you even want it to be increasing day by day, so that competitors really can't steal away your business or your customers. I can't stress how important this concept of a moat is, really. The other things as well that are important. Management, of course, is important, but if a company is in a bad business or it doesn't have a strong moat, I don't think the best management in the world can save it for long. But on the other hand, if a company has a very strong moat, even a bad management will probably not undermine it too much, right? So I think it's really about how important certain criteria, and the moat is definitely the most important criteria, I feel. I don't really focus too much on price, because these high quality companies with very strong moats are not going to come cheap. They're going to be very expensive. So some of these stocks have very high PE ratios, but I think there's a better way of looking at some of these stocks in terms of perhaps the price and the cash flow, perhaps, and also in terms of the growth prospects, and also in terms of the optionality, and of course their moats, right? So as we discuss some of these stocks, I will share some of my reasoning and thoughts behind some of these stocks. The third criteria is something I copied. It's from a fund called FundSmith, actually, and Terry Smith is the fund manager for that fund, and he has this tagline: "Don't overpay and do nothing," basically. And so basically, you don't want to overpay. I did mention, I don't really look at PE, but of course, you don't want to pay a PE that's astronomical, and you don't want to be stuck in a company which is you bought at a very high price, and then it takes many years actually to grow into that valuation. An example is actually Microsoft during the .com bubble. It was trading at about 80 or 90 PE, I think. And of course, over time, it still has proven to be a good investment. But if you really bought it at its peak, you would have to wait many years actually to see the fruits of your investment. The other very important thing is actually to do nothing. This is the very tricky part as well, because this is not a trading account. This is an investment account. basically I'm investing for the long term, and I'm looking for very high quality businesses. And you want these businesses to compound your money over time, and you don't want to interfere with their compounding. I think a good example of this is the recent volatility we have seen in the markets. And I remember just a few weeks ago on Christmas Eve, I think the market, hit bear market territory, right? It fell by almost 20%. And then just a few days later, I mean, on Boxing Day, it actually rose, many points. The Dow, I think, rose by 100 points. So the important thing is you really can't time the market. So you want to buy into this very high quality company and just hold them basically and do nothing. Because if you were to trade in and out, you will really miss some of these big, rises in the price, like on the Boxing Day in 2018. Because yes, the market doesn't go up all the time, but over time the best companies will definitely go up. But when they go up, I don't think anybody knows. And so the key thing is really to hold on to these very high quality businesses. So that in a nutshell is my strategy and the guiding principles basically. So as mentioned, these are some of the stocks I own. I intend to go into more detail into the reasoning behind some of these stocks. But I think the principles I've shared, that the companies must have very wide and even growing moats, and they must not be, of course, have sky high valuations. And the fact that they must be businesses you can understand, right? And I think the businesses I have picked really reflect those guiding principles. So I hope you took something away from this sharing, and do let me know your comments and suggestions on how I can improve this channel and what else you would like to hear from me as well. I do this with a lot of seriousness, and I pay a lot of attention to the stocks I choose. And so since I am doing it for myself, it's always good to share as well, whatever you learn, I think. So I'll be very happy to hear from all of you. Good day.